The All Share Index continued in its upward trend, advancing by 0.19% to close at 38,125.18. The year-to-date change is now at 35.8%. Now, meanwhile, the FMDQ over-the-counter trading platform launches today. Now, it is expected to organize the OTC market for better. It is expected to organize the OTC market and overall market transparency, amongst other things. Now, for more on market expectations for the platform and overall market, I am joined by Kayode Tinoye. He's a strategy and business officer at Diamond Bank. Kayode, it is great to have you on the show. Now, let's start with the FMDQ OTC launching its operations today. Can you talk us through the prospects and the effects that the body is expected to have on the financial markets and the economy in general?
Well, I think the body, the inauguration of the body is a good development for the Nigerian financial market. There is a lot of activities going on in the OTC segment of the market, but as it were, there are no coherent governance structure for that market. The advent of the FMDQ will promote that needed governance and most especially transparency in the market. I would like to see it as a very good tool for even the monetary authority, the CBN, to better appreciate what is going on in that market, and some of the signals that it expects to get for monetary policy will be more visible through that market going forward.
Now, we hear that this fixed income debt platform will support smaller companies. Now, this is even those companies that perhaps do not meet the governance requirements of the NSE OTC. Now, how confident are you that this could bridge the SME funding gap?
Well, I think I wouldn't say it would bridge that gap, but I think it will go a long way to provide some kind of alternative funding platform, especially for companies, smaller companies, like you said. Currently, you know that the corporate fixed income market is dominated by the banks and a few corporates. The coming of that FMDQ as a self-regulatory organization will provide smaller companies with a lot more confidence in the market who can access the funds in the market. And I think a lot will still depend on how the body is able to sensitize the public and educate those who need to operate in that market and some of the benefits that they stand to get from getting into that space.
Now, of course, the fixed income market has recorded significant growth over the past couple of years. Now, this is even without the presence of, a securities exchange where the instruments could be traded. Now, you mentioned that the FMDQ OTC would promote transparency and, of course, liquidity. And we hear that this is going to there's going to be a daily quotation list, which is actually going to be available from today. So when do you think that we could start to see a direct impact on the growth of the fixed income market?
Well, I think it depends really to a large extent on how well the structure is put together. By that I mean that if you look at the current state of the market, a lot of the securities traded are mainly plain vanilla fixed income securities. So in terms of the depth of the market, significant mileage would come into the market when the organization is able to introduce more sophistication in the market, a lot more derivative securitization and all that would open up alternative funding as opposed to what we have currently. So an increase in debt and development of the fixed income market is very closely tied, in my view, to the level of sophistication that can quickly be introduced into that market.
Kayode, let's move on to the Q3 results we've seen from the banking sector. Good to know your thoughts on that sector, especially after the implementation of the CRR policy for public sector funds.
If we look at the performance of the banks in the recent results that have been released, we've seen the operating environment has really been challenging, and it's telling on the results of these banks. On the average, the industry grew about 13% in terms of gross earnings, but what we saw was that a lot of that growth came from the lower tier banks as a result of the significant growth in their market share, especially in the retail space. It has been challenging, especially with the introduction of the CRR, and it is significant also to note that between Q2 and Q3, most of the banks recorded a drop in their gross earnings, of course with the exception of Zenith Bank and Diamond Bank. That tells us that even between Q3 and Q4, it is going to be a lot more challenging for the banks.
So who are the players in that sector that you would be perhaps advising an investor to hold on to at the moment?
Well, I think in the top tier sector, I would like to place Access Bank for now. It's about the only bank in that range that is trading below its book value. I think about 0.9 times book at the moment compared to other top tier banks. So I think Access will be a good stock to hold in that top tier range of the market.
Let's move on.
Fidelity Bank in the mid tier, yes. Fidelity Bank in the mid tier section of the market looks good fundamentally, particularly when you even consider the fact that they've been growing consistently in recent times. They've expanded their risk asset portfolio, and they are making significant mileage into the mid-tier SME segments of the market. So they look good fundamentally, and they are trading at a very huge discount to their book value at about 0.6 times at the moment.
Let's talk about the insurance sector. It's in custodian and allied insurance, up 7.8% in the past 3 trading sessions after the Q3 results came out. We saw the company declare gross premiums up 109%, profit after tax up 121%. So your thoughts on the results and the prospects for that particular stock?
I think the sector, I'll look at the company. Custodian and allied insurance is a very bullish company when it comes to the oil and gas sector. And you know that Nigerian insurers have been really struggling to play effectively in the oil and gas chain, and that's as a result of low capacity for underwriting some of these big ticket transactions that the local content affords them to play in. But when you look at the recent merger of Custodian and Allied Insurance with Crusader, that has given the company a lot more leverage and capacity to play effectively in that market, which they have shown a lot of interest, and which I believe holds a lot of prospect for their growth. So the result that we saw was largely expected, and I think it can only grow better for the company going forward.
Now, recently we had Q3 results out from the consumer space. We saw NASCON have revenue down 18.7%, profit after tax up 0.7%, so not that great, but year-to-date gains of 56% on that stock. So what are you thinking about NASCON right now?
Well, I think NASCON really, I'll take a neutral view on that stock, largely because its earnings have been pressured, even from the top line segment. This year, last 2 or 3 quarters of this year, we've seen an average of about 20 to 25% drop in turnover for the company, and I think that is largely on the back of its exposure. I mean the security risk that is being faced in the northern part of the country, where it is very strong, and so that is telling on its turnover, on its gross revenue. But what I like is the fact that the company is keeping a very tight lead on cost. If you see gross margins quarter on quarter has been improving. When you look at the fact that a large percentage of its raw materials are, I mean, just about half of its cost is direct cost of production. So it means that the company is really keeping cost under control, and that's will, for me, that it's a good development going forward. But in terms of earnings growth, in terms of overall performance of the company, I think that exposure to the north and that security threat in the north will continue to impact on the performance, and that's why I have a neutral view.
Kayode, let's leave it there. Thank you for joining us on the show. That was Kayode Tinioye, Strategy and Business Officer at Diamondback.